All right. So in reviewing from last week and looking at this particular assignment or this homework assignment. So what we have right here is, let me get my tools out. We'll just jump right in. So we have this move right here where we have, technically we can utilize this as a low. Now, although I understand that this is making lower lows and lower highs, I do see this movement right here coming down right here, right? So essentially, when you have a flag, so there are two types of flags you're gonna have in this downward momentum, and then it'll be the opposite for the buying momentum. So when you are making lower lows, your retracement, so your flag should be, majority of the time they're gonna come at minimum 50%, unless you have a flat flag, which is a flag that goes sideways and then they drop down. They don't necessarily come 50%. They kind of just they are what they are. So when you're looking at this momentum, or you're looking at this price chart or this price action, when you're looking here, I'm not necessarily going to utilize this one right here. Like, I'm not necessarily going to utilize this. And the reason why is because, well, there's two things. You could utilize it, but I wouldn't utilize it because technically you're kind of getting caught up in a liquidity. So if I'm watching this move, I get a low, you get this sideways, so you didn't get your 50%, it comes down right like this and then goes up. I'm more so looking to use this once this breaks above here, because now I have taken out liquidity down here, and now I have taken or not me personally, but the banks have taken liquidity down here and up here. What happens is I'm utilizing this. I can utilize this as my second dot, right? And this becomes my first dot. And the reason why I'm utilizing these two, this one and this one, is because this takes out this. So the second dot, it drops lower than this first dot, comes back up, takes the money that was sitting up here, and then it drops back down. When it drops back down, technically, looking in this area, this is your entry area right here. When you have this first dot, this is your entry area. And then you can utilize, or the entry area, the first area that you can enter in, I'm not necessarily taking it because it's a more risky trade. You want to wait till price breaks up, and price doesn't break up right here. You have to wait till price breaks above this. When price breaks above this, which it does right here, then you can look for price to come back again into this one, and you could take this trade to then go on to, you know, whatever time frame you're on, whatever take profit you want to take profit at. Essentially, this on this time frame, this is your first take profit on this time frame. You can utilize. If you wanted to, you could have made this one your first one, and this one your second one, and then wherever you wanted to go. If you're not necessarily trying to be greedy, because you're on a 4-hour time frame, so this would be a good place to take profit. And the reason why this is the first area would be a good place to take profit is because it's consolidation on a lower time frame. So basically, that's all with this particular chart. So was that what you was looking for me to explain it? Was that how you want?
Yes.
Okay. I just made sure I didn't leave anything out. So, all right. So going to our charts now. All right. And it doesn't matter the pair. All of them are pretty much the same. So I want to get one that is kind of like not choppy, so you can see it really good as far as the market, the way the market is moving, because you'll notice you'll have this happen over and over again. So let's just stop right here and take this one, for instance. So Metron tools. All right, so we have, well, we just start right here. We have a low, and maybe I should do another color, make it noticeable. Let's do blue. It's a little bit noticeable. All right, so we have a low. We have some inner liquidity right here. We have high, another low. No, it didn't lock. All right, we have another low. I guess they just really ain't trying to let me lock this in. All right, we have a high. All right, I guess I really ain't gonna lock this. And you have another low, right? I can't believe this is not locking, right? The price you're getting lower price action, and you're verifying your price action with the lower it gets. So essentially now you're looking for, as you're watching the chart move lower and lower, you're starting to look at the liquidity that's building up. So essentially, where is my, all right. So I'm gonna show you just from what we just marked off right here. There's liquidity above here, below here, above here, below here. You have liquidity on the other side of this because this is a trend line. So you have that liquidity. And then you have liquidity and in this imbalance right here, that's liquidity. That's liquidity. Right. And then any of the little small nuances of imbalance, you have liquidity in that too. So such as from, in this example, for right here to right here, that liquidity right there was taken out, of course, when they went down, but I'm just showing you all the liquidity that is on the table at the moment. So once we understand that we have all this money that's or these pools of money on the table, our job is we're not trying to enter a trade until liquidity is taken out. That's how we know it's time to enter a trade. So essentially we're looking for those dots to happen. Now, taking all this stuff that I just drew off the board, I'm just gonna clear it all. Oh, well, clear it all right here. All right, with this inner liquidity will work the same too. You can use this inner liquidity for dots, right? Because inner liquidity, you understand this, it has to be taken out. So once that inner liquidity happens right there, this right here, and again, is inner liquidity because you have, you're operating from this move to this move, right? You have this dot right here because you have this one right here. This did not come back. It did not close below it. Because if this would have came, first of all, isn't 50%. We're looking for at least a 50% retracement. It didn't come 50%. So you have this dot, now we're making this our second dot, right? Right here. Now, once we have this second dot, I want price, or we want to see price close below here, right? Once price closes below here, which it did right here, now I'm looking at a entry right here. I know essentially price could enter anywhere in this going up. This is this whole move up. Price can go anywhere, but we're shortening that price, even though we know, because these three candles right here, essentially at one point in time, or at one point in time, that was it's imbalance on a higher time frame. It's imbalance on this time frame too, but it's imbalance. So we're just shortening this up here. We want to see price come all the way up here. Unfortunately, price doesn't reach up here. That's fine. You're not always going to enter the trade. The market doesn't do what we want it to do. So in this case, it doesn't happen, right? We never get an entry, right? And another reason why we don't get an entry is because price has come after it closed, after once we have this dot and price started coming down, price I guess for lack of a better word, it came up to touch this area early. A lot of the times, once it comes to touch it one time, it's not going to come back a second time. If it touches this area before it breaks the area to the left, most of the time it's not going to come back. If that happens, you go back to your first dot, and once you look at your first dot, you take that last candle in this situation, this one right here, the last sale candle, and then that area becomes your entry. So I'm gonna say it one more time and take these off. All right. So we're in this area. We have found our first dot when price broke above here. So it took out the liquidity that was above it. We realized when we have the second dot right here, when it came back down, we drew our line down here, this purple line. Now we know it broke this structure down here. Okay, now we know we headed for a downtrend. So we look, once it breaks that area, I draw this line right here for this box, because my expectation is that price will come back based off past history across the board on multiple pairs. Price will come back to that area, more so any of these, anywhere within this 3 candle range, right? But we're gonna break it down to the last candle right here, right? Because the last candle is the point of origin for this whole move that broke down here, right? So once it comes down here, I'm looking, but I realize price has already touched that area. All that means is price is probably not going to come down there again. So now I have to look to my left, right? And when I look to my left, I look and price comes right back to the area to the left. It retested the area to the left. And I think I said it wrong the first time, and I want to clarify myself because I'm looking at it. I think I said the point of origin was the point of origin, I said it was the black candle. I want to correct myself because that was incorrect. The point of origin is the buy candle, because the buy candle started the sale move. So I just want to retract that and make sure you understand the point of origin. Just like this one was a buy candle, the point of origin over here is a buy candle. And then as you can see, price did come into it. It actually came into this whole area, but the real point of origin is this buy candle. So I want to correct myself because I was incorrect in how I said it the first time. So this essentially is your first, so this now becomes your first touch, because we missed this touch because the structure didn't break. This second touch is now your first touch. Now, this is the risky entry right here, because price could still come back up and take all of that out, because as you know, we still have liquidity and stuff sitting above here. So the less risky entry is to wait till it breaks structure one more time and then take the entry off of this structure break, and it comes back into here and drops. That's the less risky entry. And then your first take profit, we're on a 1 minute time frame, but this is your first take profit down here off of this 1 minute time frame. And this is based off this. It's not that many pips. It's almost 14 pips. And you will have to have your stop loss and stuff correct. I'm not gonna go over the stop loss right now, but I just wanted to give you an example of that. And then let's see if we can see one on a higher time frame. Well, let's look at a different pair too all together. I'm just gonna look at EA. It don't really matter. All right. So You want to see, again, the best way to be in this, you want to see a trending market. You want to see structure breaking to the lower points, right? You want to see a trending market. So here we have the market trending. Even from up here, you see it's trending in the downtrend. And then you see all the liquidity. You have this trend line liquidity being built up. You have above each high and low liquidity being built up. You have any of the consolidated areas that you see being built up. You see any of the imbalances. All of that is liquidity. That's all of that is pools of money that is sitting on the table. So what we want to do is we want to utilize this to wait, be patient, and wait until we see some liquidity taken out from the top or the bottom. In this case, because we're dropping, we want to see it taken out at the top. So let's give an example. So even if I take it back to here, like right here, this is inner liquidity. And again, this is inner liquidity because if this is our high and this is our low and we're following structure, so I'll just mark that off really quick. If this is my high, this is my low in terms of structure right now. You get a high low, you get this high low, it breaks a little bit high low, right? So this should probably right at 50%. All right, and you get this, you believe a high, but you don't get a low right here, right? This does not go past here. So this is inner liquidity. And I was speaking to the left, but since we're right here, I'm gonna talk about this. This is inner liquidity, where it appears to be inner liquidity. But if you look closer, it's also consolidation. So what are you gonna do in this scenario, right? You're gonna wait until it plays out. You're gonna wait to see what happens when it plays out. So in this scenario, we're waiting, like, because price can, in these scenarios, price can take out the money right here and right here. It can whoopsaw and kind of go both directions, right? I'm gonna take it back, I'm gonna take it back to the left of what I started with the first place, right? Now, as far as this one, when I was talking about it, if this is your first dot, this is your second dot, and this is your first dot, right? Now, you realize price comes above here. So you have these two dots right here. Matter of fact, let me delete all this other stuff. You have two dots. We have two dots. Now what I'm waiting on is, okay, I'm waiting on to see if price is going to break below here. Because price, this could easily have been a break of structure, but with a true break of structure, you're going to have more than like one or two candles, right? You're going to have multiple candles. You're going to have a breakout. So that's a telltale sign as far as a real break of structure and just liquidity being taken out. Liquidity is just usually like a fast movement of price being taken out, of candles being taken. So I have this liquidity right here. Above here, you can see we have relatively equals right here, like relatively equal highs, right? So price breaks below here. Okay, bam, we in business. When price breaks below that, I'm looking at this whole area right here. This is the point of origin. All these gold candles, all these back candles. And the reason why it's the point of origin, and I don't include the sale candle, is because all of these on a higher time frame is one candle. But in addition, the sale candle, that's not going to be the point of origin for a sale move. The back candles is the point of origin. So I have this point of origin right here, right? But I want to bring it up to the last candle. Now, what you want to do is you have what I do, you have these two small candles. I'm not just using this small candle by itself, that first one. The second one is not, I'm not using that one either because it's so small. if I have two candles like this, I'll just incorporate this to make that one candle. And the reason is because the more experience you get, you'll realize those with the smaller candles, a lot of the times it doesn't always reach them. So, and then if you look at it in terms of the imbalance, it was a small imbalance in between this candle and this candle, and this first candle right here came and filled that imbalance in before it started going down into that sell move. So this is the first entry right here, right? But this is not the safe entry, right? And as we can see here, price came anyway and swooped that up. So this is another reason why you don't want to take this first entry unless you want to take the more risky entry. So you wait for price to now break here. Price does not break down here until this candle right here. This candle breaks it, right? Officially breaks it. So once price breaks this candle, because this is the first move, right? We're not really counting this move over here. So again, just to recap, we have two dots. This is our second dot. This is our first dot. This is our first point of entry. When price breaks down, this is what we want to see price come into. But we have to see this break right here. And we're looking to make this area right here, this buy. And again, you combining these two together, you're looking to make this buy candle your second entry, but you want to have a break, right? You don't get the break till over here. Once you get the break over here, and mind you, once you're looking at this is really consolidation. So you want to, once you realize you're in consolidation, you kind of want to stay out of it, because consolidation is very, very tricky in terms of utilizing this. It's easy to make a lot of errors. So once it breaks right here, technically you could have gotten back in, but you would have got stopped out, because if you would have put your stop loss above here, right above this right here, because technically price shouldn't come up. Price came up one more time and took that out, which now created this situation. Now you have another dot right here and a dot right here. And the same thing happened all over again. So did that make sense to y'all? Or where are you all lost at? I know I said a lot. So what questions do y'all have?
Okay.
If y'all don't have no questions, it's fine. Like I said, I know it was a lot. I'm gonna do one more and then I'm gonna stop this recording, because there is so much that like you got to take this in chunks, because like I said, it can get very overwhelming when you're first trying to learn this part of it, and you want to find a structure with some flow, or a trend. When you're first starting, at least you want to find you a good trending market with a good 50% retracements, or you're gonna do a flat flag, whatever the case may be. But it happens on all the pairs.
Can we please see buy?
Yep. Let me find one. Let me see. Let me see. All right. It's a 15-minute time frame. So okay, here you go, right here. This is let me see. This is 50% right here. That's a flat flag. I don't think this came 50%. This. Yeah, it didn't come 50%, so I'm not gonna use that. All right. have a flat flag. All right, here you go. One where you're following structure. Okay. So you're dropping lower, get a low. I wouldn't necessarily count this as a higher low because it didn't go back 50%. Let me see if this one right here came back 50%. Okay. All right. Come back 50%. All right. We'll use this one, right? It came back 50% right here. So I can really count that as a flag. So that would mean for me, this is in a liquidity, right? Because it just came back and took that. And as you know, you can use this for inner liquidity, but just know if you would have used saying this for inner liquidity, you have to make sure structure breaks like it's supposed to. So, but for time's sake, we're gonna do it like this. I'm not gonna go over that. I'm just gonna do this. All right, so we see this happen. We see a structure break right here. Okay, when structure breaks right here, I put this right here. This becomes my dot. The last area becomes my second dot, or the first dot. I always say second dot, but this becomes my first dot between this area, this area. Technically, you really could have used this area, but I'm using this one because the wick is longer. So I'm putting it below this wick. So once I see this, it broke up right here. I'm looking, I want to see price come back into this area right here. Because we're buy, I'm looking at the last sale candle. So this sale candle right here is inside of this one. That's why I have this as my last sale candle for price to come into. And as you see, price came into this candle after it, went away. Let me make it a little bit more. Is that, as you can see, price pretty much came probably a pipette off or so. If I do it as that, maybe like a pipette or so off. So my expectation is if it came like a pipette off, it may not come back. You don't know. So anyway, this may not come back. So you're waiting for the second entry anyway. So remember when I told you it doesn't, if you believe it came back right here, you'll be looking at this last candle right here will be your second entry. So you go back to your first dot, right? This is my first dot. And now you looking at price could come anywhere in between that dot. I'm gonna change the color. That last candle, let's just say red. So now price does come into it right here, right? But you want to see if price has to break structure. So you only have, so far you only have one structure break. Price needs to break structure again. You could have got in on these areas, but the safer route is to see at least two structure breaks in your direction, like two real structure breaks. And then you get that break. You don't get it right. You don't get it right here. Price comes, technically it breaks with the wick, but I want to see the whole body break, right? So I don't get that to over here. I get a whole body break. When I get that whole body break, then I'm looking at the point of origin, which is this over here. And this area down here is my entry when I get that whole break. Let me change the color, and then we'll see if price comes into it. Sometimes, like I said, sometimes price will, sometimes price won't. We really don't know. And you see price kind of like left without us in this case because we didn't get the break to I got the break right here. I'm gonna take this one off so it's less confusing. I didn't get the break till up here. And price, well, if I was paying attention, I would have seen price gave us a flat flag. So because we had a flat flag, price, we should have known price wasn't coming back because it wasn't a real flag retracement. So let's
I have a question.
Go ahead.
So the second structure break, it doesn't have to break that first level. It breaks the new high. It has to break the new high.
Yes. So we're following structure because we want to see higher highs. Now we're going higher high, higher low. So I'm just following the regular structure, the standard structure. So right here we got a low, we got a high, we got a low, we got a higher high. This is the new higher high. This was the first higher high. This is the new higher high. If I bring it in. So technically this, I don't want to confuse you. This was the original first higher high, but because when we look for it to retest, it had already retested right here. So now it's almost like it's 3 highs now because it already retested. You can get in on any of those highs. They're just higher, they're just riskier. So you could have took a trade off of each one of them when it came back to the area. Just know that it's risky. So once this, we're waiting for it to break. It broke right here, right? But when price came into it, like right here, that lets us know that price may not come back into it again because it came, usually it'll just shoot off and it won't come back until it comes to touch that area. If it touches it before it breaks structure, in the case it touched right here, before it breaks structure, that means that you might, if you really want to get in it, just look at the first dot and bring that across. But I guess the easier way to say it, if it touches the area on the first dot, excuse me, I keep confusing my dots. The second dot, if it touches the second dot right here, before it breaks the structure of the first dot, this over here, then essentially you can just wait until it breaks structure again and then look at it once it comes down here. But I'm just saying, if you can't wait, you can skip this whole step right here. You can take that step out if you want and just wait. But it's a little bit more advanced. So it's not nothing that you have to get right now. And it's something that you're going to have to see over and over again. And you're just going to have an aha moment. More than likely, me just showing it to you, you're not going to get it. You're not going to get it until you start looking at it yourself. And it comes with like practice over and over again, looking for these highs being taken out. So again, we on the 15-minute right here. I'm suggesting or telling you to go in the direction of the trend, but like right here, this is the same move that we're looking at, but this is the opposite way. You have that right here, right? But it's on another time frame. I just can see it because I've been doing it more. But once you do it more, you'll be able to see it too. So all you do is once you get your dots, follow structure until it breaks. Because essentially it's going to put you at kind of like the bottom of moves. That's all it's doing, is putting you at the bottom. So I'm going to cut this, I'm going to cut the recording off right now. So hopefully whoever's seeing this, they can just practice, do it over and over and over and over again. And we'll continue to practice it next week as well, or the next time we get in. So this is the point where you want to do your own due diligence and go find these on the chart. So let me stop this recording.